Starting. All attendees are in listen-only mode.
With this conference, I'll be signing it. It's prepared to go. So we will be invoking the Defense.
The President is speaking.
Last week I signed an emergency declaration under the Stafford Act, which, as you know, we invoked previously, and which activated FEMA's National Response Coordination Center. FEMA now is fully engaged at the highest levels. Today, FEMA is activated in every region. We are at level one being the highest level, which we will work with, and we've been working with FEMA. I've done a lot of work with FEMA. They're incredible. It's always been on hurricanes or tornadoes. They're right now in Tennessee, a large group working in Tennessee, and have been incredible. It was a tragic event. Alabama last year, also a tornado, and then obviously the numerous hurricanes in different locations that were, in some cases, very devastating, and in every case, FEMA came through. This is a very different kind of a work for FEMA, but they will come through, as they always do. We have tremendous people, tremendous talent in FEMA. We're sending, upon request, the 2 hospital ships. They're being prepared right now. They're massive ships. They're the big white ships with the Red Cross on the sides. One is called the Mercy and the other is called the Comfort. And they are in tip-top shape. They soon will be. They're getting ready to come up to New York. I spoke with Governor Cuomo about it. He's excited about it. And I also, we haven't made the final determination as to where it's going to go on the West Coast. The Comfort is located now in San Diego. And it's going to be, we'll be picking the destination fairly shortly. So those 2 ships are being prepared to go, and they can be launched over the next week or so, depending on need. Earlier this week, the first clinical trial of the vaccine candidate for the virus began in Washington State, as you probably know. The genetic sequence of the virus was first published in January. But thanks to the unprecedented partnership between the FDA, NIH, and the private sector, we've reached human trials for the vaccine just 8 weeks later. That's a record by many, many months. It used to take years to do this, and now we did it just in a very short while. That's the fastest development in history of what we're doing with regard to the vaccine. We're making very, very big progress. Today I can announce further steps to expand testing capacity. We're working with several groups to determine if the self-swab, a much easier process than the current process that's not very nice to do, I can tell you, because I did it. But we have a current process that's a little bit difficult. If you haven't done, the groups are working on determining if a self-swab by an individual is as effective as the other. The other is very effective, very accurate. But we're going to see if we can do a self-swab, which is would be a lot more popular, I can tell you that. So, and that would be administered also by a health official, but it would be a lot easier to do. The fact is that the health professionals it would free up a lot. Let me just say, the self-swab is what it is. It's a self-swab. You do it yourself. The other has to be issued by a health professional, and it's something that is quite difficult. And we think it's working out for the self-swab. And if it would test positive, the people would go and they would do what they have to do. But we think that's probably working out. I've asked the FDA to cut through the red tape and reduce regulatory barriers. We are looking at some very exciting things, and I'm going to be holding a second news conference either today. We're going to talk about the FDA. Some things are happening that are quite exciting, and we're going to be doing that either later today or tomorrow, fairly early tomorrow. So we'll see what happens. But the FDA, my instructions is I've been working very, very hard on a number of developments, and we'll be discussing them with you later today or tomorrow. And this afternoon, I'll be meeting with nurses on the front lines of the battle against the virus. They're truly American heroes. They want to get it done. They're incredible people. So we're going to be meeting with nurses, and I actually look forward to that. They're very brave. They're taking a lot of risk, and they have done an incredible job, and they never complain. Today I'm also announcing that the Department of Housing and Urban Development is providing immediate relief to renters and homeowners by suspending all foreclosures and evictions until the end of April. So we're working very closely with Dr. Ben Carson and everybody from HUD. Every generation of Americans has been called to make shared sacrifices for the good of the nation. In World War II, young people in their teenage years volunteered to fight. They wanted to fight so badly because they love our country. Workers refused to go home and slept on factory floors to keep assembly lines running. And the numbers of ships that they built during World War II to this day has nothing like that has ever been equal. They were doing ships literally on a daily basis. Nobody's ever seen anything like it. And to this day, nobody's seen anything like that, what they were able to do during World War II. And now it's our time. We must sacrifice together because we are all in this together, and we'll come through together. It's the invisible enemy. That's always the toughest enemy, the invisible enemy, but we're going to defeat the invisible enemy. I think we're going to do it even faster than we thought, and it will be a complete victory. It'll be a total victory. So we'll have a second conference, again, having to do with the FDA, and I think it's going to be potentially a very exciting news conference, and we will do it as quickly as we can, so whether it's today or tomorrow. And I'll, with that, ask Mike Pence to say a few words, and thank you very much.
Thank you, Mr. President. The White House Coronavirus Task Force met this morning, and now that we have cases in all 50 states,
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, team? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
We can no longer deny it. Our nation is in trouble. The world is facing peril. You can turn on your television or you can scroll through your Facebook and see that there's violence, there's corruption, there's fear and hatred in the hearts of so many. We're contending with issues that are causing the very foundation of our country to crumble. In the face of all of this, it's important that we pray not only for the healing of our nation, but also for our president and all those in government leadership who are in position to make things happen. 1 Timothy 2, 1 through 3 says that we are to pray, intercede, and give thanks for kings and all people in authority. This is God's command to every believer today. Praying for godly leaders is productive towards God's plan and purpose for our nation. The Bible says, the heart of the king is in the hand of the Lord. He can turn it however he wants. So prayers are important. I ask you to join me in prayer. Father, today we come before you to pray for our nation, to pray for the world. Father, I ask you today to give our president wisdom beyond his own understanding, the courage to choose the right path, no matter how narrow the gate. I pray for all in authority over us, that you would give them the grace and the strength to stand against the temptation to use power as a weapon, but rather to carry it reverently, as one would a child. I pray for the spiritual leaders of our country, that they would hear your voice, that they would know your heart. God, we pray that they would lead from their knees, and by that simple grace, bringing each one of us to our knees before your throne. Lord, we ask that you pour out your Spirit on this nation to help each of us discern good from evil, not as the eyes of man, but through spiritual eyes. Lord, we ask that you humble our hearts so that we will be a nation filled with gratitude and thankfulness. Dear God, have mercy on our nation. In Jesus' name, amen. Okay, Good afternoon. Welcome back. Today's Wednesday, 18th day of March, 2020. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, you can point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. We also stream the show each day live on YouTube, Facebook, Twitter, and coming soon to the TradingView platform. So with that said, let's take a quick look at the daily chart before we go to Michael. Here it is. Now, this is the continuous contract. I'm going to flip it for just a moment to the current contract, the June contract. I'll pull these fibs out for now. You know what? We're better off staying with the continuous for the moment. We'll go to that. We'll go to the actual contract here, current contract, which we've just rolled over to June. So we've been talking about this area of support. Really quite important that this area hold. So far it has. Here, let's just put it in perspective there. And it's an area, so can we say that we've entered the area? Absolutely. Can we say that it's held so far? So far. We had alternating days, red, I guess we start back here, red, green, red. Oh, we got 2 red days back to back. We had a green day, a red day, green day and a red day. You don't need any special talent to understand that this is in fact a downtrend, pretty powerful one. Now, if we use our Fibonacci price extension tool, not the retracement tool, that's the one that most folks are familiar with. If we go from the all-time historic high down to this swing low, and then connect that to the retracement, the high of the so we have a high, we have a down leg, we put in a swing low, price does a retracement, trying to reach the BBC, but with such downward pressure, not quite able to make it. It tried valiantly for 3 days, 1, 2, 3, and then things kind of gave way. So we have already exceeded the 100% Fibonacci price extension. Let's see what I might be able to add here. Looks like I've got 7 and 8 already turned on. Let's see. No, not showing up, so let's try that again. Okay. Number of levels that can be displayed, 6. Will it give us 9? I think we had this discussion the other day. Or was it 8? Was 8 the maximum? Let's try one more time. It looks like 6. Okay. Well, then we'll take away there's 1, 2, 3, 4, 5, 6, 7. You know what? later in the show, as John's talking, I'll figure out how to recalibrate this, because we do want to see the 1.618 extension and even the 2.6. So I'll work on that during the show. Now let's go to a weekly. Each candle represents 1 week. Okay, so we've got an area of support here where, as you can see, we had red and falling, which we know is bearish. Price did spike below the BBC, but ultimately the BBC held. It holds more often, but then it doesn't. So that's going to create another important area right there. And some might say, well, but we spiked all the way down here to 2028.5. Why are you identifying this area as the potential support? You know, it could come down to a matter of preference, I suppose. It really could. I mean, this was the swing low. But for me, and for us, as far as our methodology and our strategy goes, okay, price here was rejected. So the decision-making process really took place in this area here. Okay, when we turned back up, turned blue, important price, important area. All right, so on this one, you'll notice that the CFMA1, it's the red and blue line, it didn't come all the way back to touch the BBC. So in this case, I'm a little more apt to draw it there, which, as you can see, puts it in the neighborhood of that swing low. So now you might ask, well, how important are these areas? They're pretty important. Okay. All right, so we've got a couple more on the downside. Okay. Now, this bullish cross right here, that's an important price, important area. And so perhaps we just include that. Okay. Now, the highest probability is that it will be at one of these areas where the market finds a steady footing. All right, and then if we go back any further, I don't know that we can on this platform. Let's see. But that's about all I'm getting. All right, so we'll take a deeper look. Now, I mentioned this earlier in the week. When I went to publish the weekly trading zones for the week, it was almost cartoonish. We've never seen the weekly trading zones with so much distance between them. But you've heard me say before that there have been many Sunday nights over past decade, but we've been publishing the zones since December 14th of 2009. There have been nights when Sunday nights when I published that I realized that we were almost at the lowest weekly zone or almost at the highest weekly zone. But you've got to stick to what you understand to be market truth. Okay, there's a lot of noise out there all the time, in particular right now. So
yeah, it's a mess right now.
I had right, yes, and so we had to stand by our convictions, and I had to publish the zones as they read. Okay, our lowest weekly trading zone. This sounds hard to believe. 1877/1878. Now we're sitting up here right now at 2365. The next zone below us is 2268. All right, you get the idea. So just below us, and then again the lowest. Do you have the zones in front of you, Michael?
I do not.
Oh wait, no, I see it. I can see it now. It's 1877/78.
I think I have them over here.
No, I found them.
Okay.
They were covered up. 1877/78. So we'll call it 80. Okay, so this is important based on market structure. Again, market structure. And these two dotted lines or dashed lines are based upon our weekly trading zone formula, which again has served us very, very well since December 14th of 2009. So not a lot more to say about this right now, guys. Of course, there'll be a lot more to say throughout the show. So stay with us. Michael, or if you're ready. Oh, let me do the numbers. Let me do the numbers from around the world real quick.
Okay. I'm going to be pretty quick because I only did 4 trades today. Okay. We did get the goal for the day. That part was good.
Okay.
But
well, here's
I don't know if you want to ring John.
Here's where we stand right now. Currently in the U.S., the Dow's down 1,477 points. That's almost 7%. NASDAQ down 365. It's 5%. S&P 500 down 152, 6%. And the Russell 2000 down 84, 7.5%. In the commodity basket, crude oil down $4.74, trading 22.21 last. That's a drop of almost 18%. Now, we're talking about a barrel of crude oil, $22. I would think the barrel costs half that much. You ever seen a barrel of oil?
I've never seen I've seen a barrel.
Well, yeah,
but I haven't seen a barrel of oil.
Well, I got you. Yeah, so I mean, the barrel. There's some cost in the barrel itself. I'm sure they probably have it made in China, so they got the price down. But
I'll tell you a story when I come back on.
Okay.
But you can finish.
So yeah, gold down $38, trading 1487.70 last. It's a drop of 2.5%. In the Asian markets at the close, Nikkei down 284 points, 1.5%. Shanghai down 50, 1.75%. Hang Seng down 971. That's a little over 4%. And in the European markets at the close, FTSE down 255, 5%. DAX down 493, 5%. The CAC down 260, 6.5%. Needless to say, red day in Asia, red day in the UK, and it's a red day here in the US of A. Michael, take it away.
Okay. I'll take it away. Yeah, my story about barrels. When I was a kid, my grandfather on my dad's side, well, actually both of them, were very frugal. And, a way to make money was broken glass, or, just glass. And so my dad bought me 2 55-gallon barrels so I could separate white glass from brown glass, because back then everything was made out of glass. And I filled one of them up. The white glass one I filled up. The brown glass, that's usually beer bottles, and that didn't get filled up that much. But then my parents sold the house.
Right.
And because the glass, I mean, you know, a 55-gallon barrel of white glass, there was this place called Glass Containers. And, you know, they would melt it down. And, you know, that was probably worth $150. And, you know, back then, when I was 12, you know, $150 was significant. I mean, it's still significant, but but back then it was way more significant. And anyway,
Wow.
I digress.
Wow.
But you know, they were teaching me how to make money on, you know, well, with what essentially would have gone in the trash. And, you know, unfortunately, I didn't get to cash in on those barrels. But I think the barrels, you know, my dad bought them for me, and I think at the time they were $5 a piece, and that was back then. And you know, back then when you used to have, you know, trash cans that you would put out by the road, and you know, the trash truck would come over, and you know, I knew the guy. You know, my dad is godfather to the guy's son who owned the trash company that came and picked up the trash. And you know, things have changed so much, and they're changing again right now. And you know, I was just watching what was going on. I don't know how much you listen to, Dwayne, but I got a thing from the VA. I got a message from the VA today that basically said, if you're sick, don't come here.
Wow. Wow.
You know, because there's so many old people.
Sure.
And I just watched.
They're overrun, yeah.
Yeah, and I just watched a thing, you know, in the presidential address when the, not the defense secretary, but the guy who's in charge of the VA came on. He was basically saying, you know, if you're younger and you're sick, call. If you're sick, you're going to get tested before you're allowed in. And you know, that is the population, really, the population that is going to get hit hardest. You know, you know, like Jada's dad, until yesterday, we didn't let him in the house because Jake had a fever 2 weeks ago. And you know, until yesterday, we didn't let him in the house, but we had a big deal yesterday. I mean, they just, you know, sold their house, and we're looking at new houses for them, and all kinds of crap. But right, it's a big deal, and it's freaking people out right now.
Yeah.
And the markets are just crazy. You know, I traded the ES in Crude today, and you know, I did 3 trades on Crude. One for 5 ticks, another one for 5 ticks, another one for 5 ticks, and 1 trade on the ES for 9 ticks. And so, you know, going through the normal thing that I would do, I'll show you the spreadsheet. Hang on. Bring it up. Why does that always go away?
I don't see anything.
No, not yet.
No.
Not yet. Hang on. Let me see what you do see. Yeah, you just see my chart. Hang on. I gotta open up Gmail and then open up spreadsheets and then pick the right one. Here we go. Okay, so we were up pretty good on the day. I mean, I really wanted to, I want to end this month averaging over $600 per contract per day. But today I was doing a little more talking than trading. And so we picked up 15 ticks on Crude and 9 ticks on the ES. We're up 262 on the day. It took 16 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract. We took 4 trades in total today. but there were so many more trades. If I was focused on trading, it would have been another day like this right here.
We had a nice alert, a logic alert. Well, Concierge and logic, but we had a very nice logic alert on Crude last night. That the numbers on the Crude. The entry was 25.95. The first target was 25.65, and then the final target was the weekly trading zone at 24.30/35, and that is the lowest weekly trading zone on Crude for this week. So 25.95 to the final target at 24.35, and the market continued to drop. So
yeah,
anyone that understands how to trail their stop, of course, we're looking for exit signals, etc. What are we down to now? 22.74. Yeah, that alert will be the last Crude alert on J. Everything coming out today will be for the K contract.
You know, it might have been easier to trade the J contract today. I mean, the trades. Well, I'm going to roll this back right now because I did trade it this morning, and whatever I drew on here. Hang on, it's gathering data. Whatever I drew on here was on the J contract.
Okay. So if you flip that to a 30-minute real quick.
Okay. Well, I got to go back here.
There you go.
Yeah.
So the entry again was 25.95, which in the grand scheme of things, yeah, it doesn't. It's not a whole lot, but then yeah, the final target was 24.35. So that's about $1,600 per contract, I think. So it's just a small slice out of what happened, but again, for everyone's benefit, if you're new, it's not part of our program, part of our strategy or methodology to buy the low or sell the high. That's not what we do. What we do is we look for a move that is underway, and then we look to take just a little scoop right out of the middle. We're middle players. So
that's right. You know, the markets go up and down and up and down and up and down. Here, I'll draw it.
Once a move's underway that has some conviction to it, then we're waiting for the pullback, and then the continuation, and yeah.
So we want to get in here, get out here, get in here, get out here, get in here, get out here. And then eventually the market's going to pull way back, like that. And at that point, you're changing directions.
That's
okay?
Right.
Then you get in here, you get out here. You get in here, you get out here. Get in here, get out here. And our indicators actually show you that. Like right here.
There you go. It's right there.
Hand.
The writing's on the wall.
It's on the charts.
On the chart. Yep.
He moves up, comes back, moves up, comes back, moves up, comes back. But right here, it exceeds this level. This level. Right here. Oops. I'm going to draw the whole thing. And then it goes the other way. And look what we did. Right here, I picked up 5 ticks. That was my first trade of the day. My next trade was right here. I picked up 5 ticks, and then I flipped to the other contract. And I flipped to the other contract. Hang on. And then we picked up another 5 ticks somewhere along the way. Here it is, over here. Now you see it went down, went up, went down, went up. We jumped in on the leg down, took 5 ticks. It went up, exceeded the prior swing high. We didn't do anything. Then it went down, exceeded the prior swing low, giving us a trend, and there was more opportunity in there. Now it was moving around so fast today that once I got 2.5 times the goal for the day, I had pretty much stopped trading. I mean, if you look at gold right now, for instance, you see there's a spread. So you put a trade on, you're going to lose a couple of ticks right at the start.
Right.
And if you put on a trade right now, or let's say you put on a trade for 50 contracts, that would wipe out all of this, and you'd be probably entering all the way up here.
Mm-hmm.
So, you got to be careful right now. All right, this is going to stop. The euro right now is probably the most tradable market because it's got kind of a normal. It's less than normal, but it's kind of a normal flow right now.
Right.
The ES, you can trade the ES, but it's jumping all around. And these numbers right here this morning, we're down in the 100s, and they're normally in the 3,000-4,000s.
Right.
And so, I mean, you can do it, but you just got to be careful about it. And crude oil. Well, crude was jumping around again today, but
volume on the day for the S&P is currently about 1.5 million.
yeah, and
Yesterday was. Are you ready for this? Oh no, I'm sorry. Hang on. I'm on a weekly chart. Let me put it back on daily. Daily chart. Okay. So we're still at 1.5 million on the daily. Yesterday we did almost 4 million. Yesterday, almost 4 million contracts. Back on February 28th, we did 5.5 million.
it's
Prices on the low of the day and falling.
it's just crazy right now. And I mean, there are times when you should trade and times when you shouldn't trade.
Yeah.
And if you're in a market that is untradeable, like the ES right now, and gold, the trade setups are there, but you can go to a different time frame and get a better picture. Like today, Bart was saying his computer wasn't keeping up, and I was like, well, go to a 3-minute time frame. I mean, the trade setups are the same. It's just the risk that's a little bit different.
Right.
And and if you do that, it's a whole different picture. And going on the 4-tick range, which is my favorite, you just got to be on top of it. You got to be right on top of it. You see, I have the Canadian dollar up here because it didn't look like it was going crazy today, and it was tradable on a 4-tick range. When I put it on, let me scroll back a little bit farther. It was around 11 o'clock when I put it on. But see, I mean, you have perfect trade setups, and it's not nutty like everything else is right now.
Right.
So if the markets that you're looking at are just insane, then look at a different market. Because not all of them are going to be crazy like that. What did I just kill? The 6E? Yeah, here it is. Because not all of them are going to be looking like that. And looking at the other currencies, the trade setups are there. They're still working. Everything is the same. But if it's too fast for you on gold and too fast for you on the ES and too fast for you on crude, then look at the yen. Look at any of these other markets and find one that's not too fast for you that you can trade. I mean, and today, the margins on crude were bumped to 200%. Everything else was 100%. And I don't know if you've looked at the margins lately, but right now, the initial margin on the ES. So to be able to place a trade on the ES, you need to have $11,660 in your account. The euro, well, that's only 2,145, and that's, I mean, that speaks volumes by itself.
You know, and that's the brokerage firms not only, you know, protecting themselves, but I think it's really good for the traders as well, because I think it serves as a barrier to keep some people out of the market and attempting to trade in conditions that just really aren't tradable. So
yeah, you know, they don't like making margin calls. They don't want to do that, but they have to do that. So they're protecting themselves and they're protecting you. And so, you know, if you have an account under $10,000, let's say, then you're not going to be able to place a trade in anything but markets that are stable right now. Okay, so you got to go look for those markets, and they're out there. They're out there. I mean, I just showed you the Canadian dollar, perfectly tradable.
And we're closing we're closing that border down too.
Yep. Yeah, I know. I have Macy's on the way back from Miami right now because they shut down the beaches. And
hey, it looks like John's here.
Yeah.
Do you want to go ahead and open up his mic? All right.
Yeah. Sorry.
No.
Hey, John.
No.
Oops. Nope. I opened it. You opened it.
Hey, John. Welcome to the show.
Hi there. Just a second. Okay. You know, I'm going to ask you a question. How could you make the market go limit up 5 days in a row?
How can you make the market go up? I don't know.
You get a cure.
Believe it or not, we discussed it on this show a while back. There's a guy on the Fed who could make it happen if they adopt his ideas.
And what are those?
Well, Kashkiri, 15 months ago, came up with an idea about putting 5 trillion credit into the economy. Right now, that's what they need. They need 5 trillion rescue package, and take $1 trillion to basically make sure that companies can get through. They've just had a guy on, I can't remember his name now, but he was on a minute ago. He's going on basically saying what I'm saying, which is...
Are you talking about Bill Ackman?
Yeah, that's the guy, yeah. He's saying, you know, it's
He's
probably
also the
month.
guy that did that Herbalife thing, so that was not his finest hour.
Yeah. But anyway, well, he was right to start with, but he didn't cover his short, remember? So that's a mistake. But he would have made a fortune if he'd done that. But and he may be right now, because I'm sure that I haven't looked at it recently, but it's probably way down. Yeah, it's not down that much actually. It's at 46. But
What is it? HLF?
Oh, sorry, 25 right now.
Yeah,
I still have the charts going.
HLF.
Yeah, so he was ultimately proven right. So, and I never went above 60. So looks like it was a pretty good. I don't think it went above 60. No, never went above 60.
Well, he lost his shareholders billions and billions of dollars.
Anyway, you know, this morning it was kind of encouraging that the market didn't tank immediately. It kind of had this rally. But now it's coming off again, and unfortunately, it looks like it's gonna continue. The VIXs are insanely higher again, and I think we mentioned this yesterday. The UVXY has gone through 100.
Yeah, so
and that's very, very dangerous.
26.
Yeah, it's very, very dangerous, because when the TVIX went through 100, it went to 200 like. Within a day or two. So this is really, pretty bad, unfortunately. So, I mean, we went down, we opened above 100, we pulled back to about 97, 8, somewhere like that. Now we're 121, so it's a really dramatic day. The this is the fear factor. This is the fear index, and the fear index is going crazy.
Here's the UVXY on a daily, staggering.
Yeah, 121, and well, we mentioned it at 11. Remember, 11 and a half or so.
Yes.
That's where we bought it, and the TVIX as well, not 39. I can't believe. We certainly had some upside targets, but nothing like this. This thing looks like it's going to 1,000.
Looks like it. Sure does.
Yeah, it's just up right now. It's up about 20-fold right now. It's a little bit more than 20-fold. So but one of these days it's just it'll probably open higher, and then you'll see a big red candle, and that might be the end of it. But it's certainly challenging. Oh, by the way, there's a chart of 1929 with this year, and believe it or not, they kind of like they overlap each other almost perfectly. And I guess the best case scenario is we somehow rally today, and this is it for the downside. The second best case scenario is we go down on the S&P, probably take out 2,000, maybe go down to 1950, or possibly down to somewhere between 1750 and 1950, and then there'll be a rebound back up to 2,600 based on the 29 model. So there is a rally coming, but we just don't know when it's going to be. The real rally will start, but it's probably no more than a few days away, because and it could happen by Friday. I think we've got to be right on the ball on this show, because they might try to rally this thing on Friday to avoid another weekend like we just had.
Right. You got to roll that, Dwayne, to the K.
Yeah,
I'm just showing last night's alert,
okay.
But everything that goes out today, will be the K contract for crude. I mean, a week ago or 2 weeks ago, people were fretting, could we possibly see $20, or could we see crude oil in the 20s? If this thing keeps going, we could see it in the teens.
Yeah, 15 is what they're talking about.
I mean, what is the cost of production? And I'm sure it varies from company to company and oil well to oil well, but any idea what the cost of production is on average, John?
It might go down to 15. That's a point. It's maybe 18 and a half, possibly 17 and a half, somewhere like that. Then I think it would rebound really, possibly quite dramatically. But
here we go. According to the January 2020 EIA report, the average price of Brent crude in 2019 was 64 a barrel, compared to 71 in 2018.
The cost
production
of
cost $5.85 right here.
There.
So by the time you add everything in, you're at $23. So effectively, we're trading, and this is using Brent as the example, not WTI, but we're already trading basically at the cost of production. Well, what's all the other costs are added in? This is very difficult.
We're going to end up paying for that in the future.
Yeah,
I'm telling you.
So anyway, the VIXs are the premium of these VIXs is like insane, because look, we're going to way new highs on the VIXs, and we're not actually hitting new lows in the market yet. So that sort of tells you that these are.
I think we are, John, aren't we?
No, sorry, I'm looking at the Nasdaq.
The NQ is slightly off the lows, but the S&P.
Yeah.
The S&P has
what's
taken
kind
out
of interesting is the SPXY, which is the bullish opposite of the UV. It's not down that much actually.
What is it again? What was the symbol?
SVXY. I mean, it's not down in the same in relation to the huge spike in the. And look, one of the things, as I've said before, this is a little bit like 2009. See this defined trend line, right? And that trend line breaks.
This one here.
Yeah, that's gonna, it'll probably be a spike, and then we'll go roaring back up through that trend line. There is some very good news out of China. Oh, look, there's a couple of articles. There's a Google Professor Elliott, Stanford. Elliott, Stanford University.
Elliott Engel, is that him?
No, Stanford University.
Professor.
Or just Google "humanity will survive." It might come up.
Humanity will survive. I believe that. Let me see.
Just put Elliott in there along with it.
Corona is slowing down. Humanity will survive.
Yeah.
Okay.
It's a pretty interesting article. Michael Levitt. Sorry, I got confused.
Unexpectedly, it became a household name in China, offering the public reassurance during the peak of the country's coronavirus outbreak. He did not discover a treatment or a cure, just did what he does best, crunch the numbers. The statistics led him to the conclusion that, contrary to the grim forecast being branded about, the spread of the virus will come to a halt.
Yeah. Hold on a minute. I'm going to get a tweet, Twitter guy to get you a look at it. I'll be right there.
Okay. All right. All right. Last night, guys, here's where we stand for the week on Logic 247. Two alert services, one based on previous price action, the other based on current price action. This is the one based on current price activity. So far this week, we've had 14 total alerts. 2 never triggered. One I had to void out because I duplicated it. So we've had 11 actionable alerts. Nothing's been stopped out, which is quite surprising considering the incredible volatility that we're dealing with. This is what the week looks like. Week 85. Last week was week 84. Week 84, we had a total of 33 alerts, 27 actionable. We had 2 stop out, 7%. We averaged 20% being stopped out. Interesting that with this incredible, crazy volatility that we're seeing these numbers.
Hello?
Yeah.
Okay. Just go to Twitter and look for ampersand.
Say again.
Just search if you can.
Why in the world would I not automatically log in? Hang on. Okay. All right. Tell me what to search for.
Ampersand, the and sign.
Mm-hmm.
No, the other one.
Oh, the ad sign. Gotcha.
Yeah,
Okay. Okay.
Okay. SC Norman 1.
SC
Norman 1.
The number 1?
Yeah, go to. See underneath says go to.
Got it.
Okay, go down a bit.
Keep going.
Keep going. There it is. Check out that one. What was that?
Daily new cases?
Yeah, that's the states. Go down more.
Okay. Keep going.
Yeah. It's weird. It's.
Got a keyword or anything I can
Let me
use?
go back because he might have retweeted. Let me just check it again because it's really important to look at this.
Okay. All right. So back to logic. Thumbs up means price got to the target. There's initial target, final target. And then last night that was the crude alert. Now let's go to last night's concierge trade alerts. These are the ones based on previous price action. When you have the old and the new pointing to the same place, that usually deserves a second look. So last night the alerts got out at 9:55 p.m. Eastern. I'm going to grab a screenshot, go ahead. I'm going to pull them down. Okay. All right, on the S&P, the alert was to be short 2384. Now, here's 2384. So, here's where the limit was hit. Gap lower open. So we climbed up through that number instead of dropping through it. Because of this, we just kind of hopscotched over it. The long trigger was at 2463. So we've not touched that. What we did touch was the 2384, which is right there. So this is a 30-minute chart. The market gave us 1, 2, 3 opportunities to trade the trigger at 2384. Wow. Every CFRN trader had the opportunity to take advantage of this first drop from 384 to 356. That's about 30 points. $1,500 per contract traded, and then there's almost a duplicate move, and then it's third and final. So far we've dropped to 2342. So from 2384 to 2342, about $2,000 per contract traded. That's the S&P. The Dow, we'll see just a very similar. Here, last night, we have the Globex open right here, sitting right on top of the BBC. The following candle, it takes us below the BBC. So it's at this point right here, based on our methodology and strategy, that you Tim, check with Valerie. She does the recap. She'll explain it to you. We don't want to risk more than $300 per contract per trade on any alert, whether it's the concierge or the logic. Okay, on the Dow, the number was 20105. 20105. So this one triggered just before the market went to sleep. And what was the low? 20039. So we're talking about basically a 60-point move in the Dow, $5 a point, 300 per contract traded. Then once the markets came back to life, we've only triggered once on the Dow. The number is to sell 20105. Swing low so far 19,225.
Hello.
Yeah.
I tried to direct message you on Twitter, but it wouldn't let me, so I sent it by email to you.
Okay. All right, I'll check for it. Yeah, when I have to log out of my account to look at your Twitter feed because it tells me that I'm not authorized. So I don't know what's going on. But I've got
Actually, just click on his, that thing above you might like, just above that, the images there.
Uh-huh.
And just go to the right. Just keep going to the right.
Looks like it's the same thing over and over.
Oh, okay. That's kind of interesting. Okay, this is the one. This is what I wanted to show you. Okay, so even in Iran, they're getting a little bit ahead of it. Go back to Iran for a second.
There we go.
So it's kind of like, it's stopped going higher, but that way, that's something. I mean, in a country of like, 80, 100 million people, it's not, I mean, it's not that big of a deal, really, in the larger scheme of things. Go to Korea now.
Okay. There we go.
I mean, that's Korea. Okay, now go to China. I think China's going to be next.
South Korea. Now, North Korea, we don't have any information from them about
King Jong-un says that it's, call him King.
Yeah,
King
well, he would
Jong-un
like that very much.
Yeah, he says there's no virus in Korea because he killed it all. So
because he what?
He killed it all. They got rid of it. So.
My goodness. Okay. Well, he did promise America a Christmas present.
Go to the right a little bit more. Okay, this is China. I mean, this is dramatic. Look at this. Yeah, and look at the dates. I mean, it's literally it's a little bit more than a month. Look at that.
So the huge spike was February 12th.
That was when they did this kind of a new calculation. Remember?
Right. Yeah.
Yeah.
It wasn't that the situation got considerably worse. They just got better at reporting it and running the numbers.
The next one. How about that?
That's very encouraging. If these numbers are correct, it's very encouraging.
Yeah. I was talking to somebody else about this last night. The book, The End of Days, and the End of Days, and what was the other one? The Darkness. Both of those, I think, said that the virus would disappear almost as soon as it came.
Oh, is that the one that we were reading and quoting the other day?
Yeah.
When Garrett was on the show?
Yeah.
End of Days.
Put Amazon, End of Days on Amazon. That might bring it up.
And we're looking for the book, right?
Yeah.
Yeah, Sylvia Brown. Yeah, right. We were quoting from this the other day. It shows up in this book, which is supposedly a prophetic type thing, but then almost identical words were in a novel written by, was it Dean Koontz, back in the 80s? I'm sure they have to reference that here somewhere, because everybody's been talking about it.
But End of Days, Wuhan, Wuhan might come up.
Maybe that'll do it.
Yeah, there you go.
It was Dean Koontz, not Sylvia Brown, who wrote about Wuhan 400. The book End of Days by Sylvia Brown explores predictions and prophecies about the end of the world. It was first published in July of 2008, more than a decade before the new coronavirus was first reported in Wuhan, China. But a February 19th Facebook post suggests that the book predicting the outbreak now causing global panic. It shows two photos of text with certain words and sentences underlined or circled in orange. The first photo has this sentence underlined: they call the stuff Wuhan 400. So let's just go down to these pictures. Are they not going to show the pictures?
Go back up a minute, because I think it says that about how it ends just as suddenly as it came. That's
yeah, I remember that.
And really, that's kind of happening in China and Korea.
Here, let me do this.
As we mentioned yesterday, Thailand and Singapore are the kind of model countries right now.
That's where we already were. Yeah, here we go. In around 2020, that's not a very good picture.
Yeah, and it will suddenly vanish as quickly as it arrived. See that?
Uh-huh. Yep. Almost more baffling than the illness itself will be the fact that it will suddenly vanish quickly as it arrives. Attack again, you can't read it, but that says 10 years later, and then disappear completely.
Okay, check out the UVXY, Dwayne. It just, in a kind of a mania peak, just peaked at 134 and it's dropped to 125. In a matter of seconds.
Wow.
Can you put up maybe a 3 minute or a 1 minute? See what it looks like.
There we go. There's 3 minute.
Yeah.
That's pretty dramatic. It's pretty dramatic.
How about that? The SPXY has already jumped $1 from what we were looking at a minute ago. How about that for a call? Look at that.
Yeah.
So this looks like an extreme, this is a pretty big deal. So, this is a little bit like Tilray. Remember the day Tilray went to 300?
Mm-hmm.
And
I do.
By the time I came back in, ducked out for a minute, and by the time back in, it was already down to 280. And that was, before the end of the day, we were down to like 240. This could be that day. So feels like it. Let's hit the TVX and see how far it got up.
Now, Eyes of Darkness is the Dean Koontz novel that did not in a tweet that has been widely shared, someone said that Koontz had predicted the coronavirus outbreak based on a screenshot of a page in the book, but to say that Koontz saw all this coming is a bit of a stretch. A novel is a work of fiction after all. Okay, well, fair enough, but it's still right there. I mean, it's in the book. You can deny it. You can say one has nothing to do with the other, but it seems a little more than a coincidence to me. They call the stuff Wuhan 400 because it was developed at their RDNA labs outside the city of Wuhan. Anyway, what was it you wanted to look at?
The TVIX. How about that? I hit 1,000. Look at it, hit 1,000. It's at 875 now. Jeepers.
Yeah, that's quite a turnaround.
This is it. This is it. Right, Dwayne. Look at that. Hit 1,000. Give me a break.
Has the market itself responded yet?
Yeah, it's picking up a little bit already.
We just took another big hit too. In the last 30 minutes, we dropped from 2351 on the S&P down to 2321. I can tell that this thing is subsiding just because of the way my chart is scaling right now. This is more like a normal candle, 2351 to 2322. This is far from normal, and it may be some time before we see normal.
I don't think I've ever seen $100 move happen so fast up and down as this stock just now, the TDIX.
So we've made it into that area that we highlighted here. This low was put in back.
Hold on, we've gone up.
This is the December 26, 2018.
$400, almost $400, $350 in about 3 hours. No, 3.5 hours.
Crude has not got the memo. Has not got the memo yet.
That's pretty. I don't think we've seen that before.
Probably not. Anything else you want to cover?
No, I think we kind of covered things today. So, yeah.
Okay, Mike. I don't have quarterly charts on this platform.
Yeah, we have to see.
I don't think I have
back
them over
up
here
now. Back up now to, I think if we close below 870 today, maybe 850 even, that might do. That might be enough. Might be enough.
What?
Look, the other one. Check out this. So check out the SQQQ. Okay, look, although this looks kind of bullish right now, and it may imply that we've still got that leg down that we were talking about. Mm-hmm. We're not making new highs on the SQQQ versus the other markets.
Right.
So, yeah.
Okay.
Okie doke.
All right, John. Thanks.
Bye.
All right, guys. So crude's still falling. This is the lowest weekly trading zone right here. Now, that was logic 247 alert 3335. Okay. Which triggered right there. Now, we were having a discussion in the Telegram group last night about looking for, you can just trigger in on an alert. Second it triggers. Okay, see, the initial trigger was here, bounced to here. We were in the discussion group, we were talking about the potential for it to come up and hit that BBC on the 30-minute. Let's take a look at it on the 5. Let me just show you the conversation. If you're on the trial and if you're not hooked into the discussion group, you have access to it. Check with Valerie and she can make sure that you get hooked up. Okay, so we talked about a lot throughout the evening. Just go back up here and see what's important. Okay. What time are we at? Okay, so we're at 6. Now these times you see are Pacific. I'm in Phoenix. We don't do daylight savings time. So at this point, I'm on Pacific time. All right. Where did this conversation begin? Big discussion. So again, if you're on the trial, if you're not participating in this, you're missing a very important part of the trial. So I'm going to stop scrolling here and just... So this was early yesterday afternoon. So on crude, I was just showing a window of opportunity. Put a trend line on. Crude 30-minute. One of these 2 windows will be filled. That's not news, just an observation. Okay, price will only go sideways for so long. So one of these two are going to see action, and the next chart shows you where that was. What began as a gap higher open quickly reversed. See, it's 6:02 p.m. Eastern, so the Globex session was underway by all of 2 minutes here at this point. See how that window of opportunity filled? 5-minute crude turned down at the BBC. Okay, that. Okay. Here's crude finding support at support. Okay. This is all part of learning how to read a chart, how to understand what the chart and the indicators are trying to tell you. Okay. So here's a counter trend window of opportunity. Why is it counter trend? Well, because the trend in crude was down, right? However, we expect price to revert to the mean because it always reverts to the mean. And in our case, the mean is the BBC. So here, bearish cross, price pulled away, price pulled back to the BBC. Leg retracement. Anytime you're left with that wick sticking out up above the BBC in a move like this, just doesn't get any better. And so here we sit, price flattening out. Is it time for it to revert to the mean? If it is, and if it does, then that means it has to pass through this window of opportunity. 2703 to 2713 to 2723. Okay, that's a 20-cent move in crude or a $200 per contract move. But again, it's counter trend, which could, of course, continue its way after it completes this, could continue its way right up to the 30-minute BBC. The higher probability trade is waiting for the meetup and then trading the window to the downside. And Joe asked somewhere around 2750-ish. Depends on the speed at which the move unfolds, but you have the right idea. Okay. When will these two meet up? Okay, that will depend on price action. Price could come out of here like a rocket. It could continue to trade sideways. If that happens, then the BBC is going to drop. These two will meet up. They always do. That's how markets work. ES 30-minute. This was at 6:16, so we're 16 minutes into the Globex Open last night. ES 30-minute has all the right ingredients for a move higher. A dip below 2450 would take the zing out of the bullish bias, take the pep out of the step. At the time, it didn't look like we were in any danger of a limit move because the markets were relatively quiet. We're only 21 minutes into today's session, which began last night at 6 p.m. Eastern. If we print 2440 on the ES, things could accelerate to the downside. So we had a window of opportunity. Opening the window means price enters it. Closing the window means price trades through it. And that's exactly what happened. To those on the trial who may have missed this members discussion, here it is. So I've been trying to service both areas, those on the trial and those who are the members. This comes from the members discussion group. Consider ES 2452 to 42 or 2490 to 2500, whichever presents first. Remember, price is going to do one or the other. Your ability to look at your chart and to discern what the driving, motivating force behind any move is will help you to understand. You can't tell the future, but you can know what the next high probability move is. Just because it's the next high probability move doesn't mean it always happens. But it happens more often than it doesn't. So we closed the crude window to the downside and then turned right around and closed the crude window to the upside. Crude has defined new resistance here. Crude 30-minute missed filling the window by just a few ticks. Okay, see that little space right there? Now, why did price stall right there? If you look left, see price was rejected here, it was rejected here, it was rejected here. That's all it is. Okay? But that window of opportunity right there, that's enough to give you your goal for the day. There, every one of these charts that I've shown you where these windows of opportunity appear and get filled. If you can string together just a couple of these small moves each day, as opposed to trying to knock it out of the park, you'll find that it's a much less stressful and more sustainable method of trading. And these types of opportunities, you don't have to sit around all day waiting for one to show up. Go to any given chart at any given time, and if you don't see that window or a window in your preferred market, in your favorite market, yes, Bill, we've rolled crude forward to the K contract. Okay, yes, 52 to 42, window about to open. Okay, now 52 to 42, it's a 10-point move. $50 a point, it's $500 per contract traded. And these opportunities, and all, you know, for hours last night, I was in the discussion group just pointing them out one after another. Here you go, here you go. They're there once you learn to see them yourself without me having to point them out. Then you don't need us anymore. And that's the goal. The goal is not to keep you under the thumb of some guru for the rest of your life handing you trades. We hand you these alerts, we hand you these trading opportunities so that you can learn to spot them yourself. $52 to 42, that was posted at 6:52 Eastern. 2 minutes later, done. 52 to 42, 2 minutes. Now, what's this? You see what happened? Price closed the window, and then it went right back up to the top of the window. Important prices, important areas are almost always tested. You've heard me say that so many times. This is exactly what I mean. So price did the deal, then bounced back up to the top of the window. Am I saying the move will repeat itself? Now we're 57 minutes into the session last night at this point. Well, I'm just saying it's a high probability. That's all we have. And there it is. Important prices, important areas are almost always tested. However, any time that you try to make it about anything more than a probability, your ship has sunk. This is a business based on probabilities. So here's 2 windows below. ES 30-minute, 2 windows coming up. Pull back to the BBC. This is a 5-minute view. We got a doji right at red and falling. First window, 2404 to 2397. James asked about the current weekly trading zones. which there's the first window closed. Right there, first window. First window, that's a 30-minute view. Second window, 2386 to 2380. Now, could you trail from one window to the next? Do you have to get out at the close of this window and stay flat to the open of this window? No, you don't have to. If the market dictates, if the chart dictates, you can just trail it right down. The more conservative, the more cautious trade is to trade the window itself. But it becomes a matter of preference. Okay? This chart highlights the potential obstacle between window number 1 and window number 2. So up here, got window number 1 and window number 2. I mean, why in the world wouldn't you do something? I mean, what's up with that? Well, here's what's up with that. See that swing low? See that area? Ray comments, wow, it bounced off that area. It did. Looks like we get a second opportunity at number 1 before we go to window number 2. Again, important prices. This is a completely different setup, a completely different window. Important prices, important areas are almost always tested. Five-minute, will price be rejected here again, or will it reach up to the 5-minute BBC? See, these 5-minute candles, okay? Try to get to the BBC. Nope. Try it again. Nope. 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 Yep. The question has been answered. Now we get excited, okay? This speaks opportunity. Pull back to the BBC. Boom. Pull back to the BBC. Now, look at this dynamic. You've got price at the BBC. You've got blue and climbing here. In this opportunity, if all you did was look to clip from here to here, that means you leave this on the table, but that's okay, because that's more than enough. Here's the next opportunity setting up. Remember, blue and climbing on any chart, any time frame, represents support or higher prices. 5-minute has now touched the BBC. Price just touched red and falling on the 30-minute. So we're touching red and falling. That's bearish on the 30-minute. And that's bearish on the 5-minute. Both represent potential resistance. 5-minute. See how price reacted to the downside after touching the BBC. So that's a move of about 6 points right there. Second attempt to close window number 1. This is the second attempt to close window number 1. Only made it about halfway. Price is now pinched up between blue and climbing, which is bullish, and approaching the BBC from below. So price is pinched up into this area. It has to make a decision. I showed this chart earlier where I said crude has defined new resistance. Here's what it looks like now. Okay. Price briefly dropped below the horizontal channel, right here, then traded its way back up into the channel. So I extended the support and resistance lines so that we can see that the majority of price is contained in here. I believe Picasso could find a reverse head and shoulders in here somewhere, that being the head, that being the shoulders. Channel break right there being the head. Crude, 3 windows to work with. I put this out for the guys last night. Each one of these windows is just a wee bit off where it should actually be. I challenged the traders in the discussion group. Your job is to slide each one just a bit so that it accurately reflects friction-free opportunity. In other words, draw the boxes on your chart and place them where you think they should be. Each one of these was just off just a tad. Take notes, be honest with yourself about the results, then on Thursday night we can go over your results. By the way, when trading is reduced to the lowest common denominator, as I've done for all of our traders, it's not unusual to experience a little bit of la petite mort. That's French. Google it. The realization that there really is no magic, no mind-blowing secrets behind trading, that in fact is just a job, can be unsettling, anticlimactic, and even bring a twinge of sadness. It'll pass. 1 minute you're James Bond, then you catch your reflection in an unexpected mirror and realize you're just Bob the Builder. No offense to any Bobs or Builders in the audience. I posted this chart earlier as a challenge. The upper window closed 2 times. How did you do? Support and resistance lines haven't changed yet. You see how we closed the window of opportunity once, and then we closed it twice. In fact, you might look at the potential to trade from here back to the bottom of the window. See, you could trade up through the window, back down through it, up through it, back down through it. Important prices, important areas are almost always tested on both sides of the spectrum. Here's crude. That's the window. I just put it out there for all the traders. And then this is what happened. Okay. Trades right down through it. Again, none of this is magic. There's no secret. It's your ability not to learn some gimmick or buy some gadget. The challenge, the task at hand, is to put away the toys and actually learn how to understand what the chart is trying to convey to you. Each one of those candles is a graphic representation of investor and trader sentiment under whatever time frame you're observing. When you learn to see it in this manner, it all just becomes very logical. Does the market sometimes do something illogical? It does. I showed you an example of that yesterday. And then there was last night's logic alert, the one I have up on the charts right now. The ideal situation. Now this applies to every Logic 247 alert, every Concierge Trade Alert. The ideal situation is at or near the entry, which would be, in this case, 25.95. We get a nice strong leg. We then get a retracement to the BVC, which hopefully at that point is at or near the trigger, then a follow-through leg. End of today's show, I drew on the chart, showed the part of the move we would have an interest in. Okay. Now, Michael did this very thing a little bit earlier. This blue line, consider that to be the BBC. I know the BBC is green, but I'd already used green, so I had to use blue. So here's the bull-bear cross. We're above it, so we anticipate higher prices. So the market gives us a nice leg to the upside. Then it retraces to the BBC. And then it continues higher. We don't trade this part. We don't trade this part. We want this part right here. Now, can you trade an impulse leg? Sure, it's discretionary trading. You can do anything you want. The pullback, can I not trade that? Sure you can. It's called a counter trend trade. Okay? So either one of these are valid opportunities to trade. But when it comes to the alerts, I only want to give you what I believe is the highest probability opportunity. And so we had a leg, a retracement, continuation of the leg. So once this leg starts to build, okay, from here to here, that's where we want to do business. What happens here and here is just setting us up for this. And then what happens after this, we're not going to worry about that. We're not going to worry about money left on the table or any of that stuff. We simply wait for this, and then we trade the highest probability opportunity with the lowest risk. If you're entering this move up here, your stop loss only need be here. Because if price gets back on the south side of the BBC, well, you want to get stopped out because you're on the wrong side of the trade or wrong side of the street. I drew it again on this chart. The blue line's the BBC. We have a leg up, green, retracement, red. It's the second move up off of the retracement low, where I highlighted in yellow. That's what we have an interest in. That's our sweet spot. And this was the alert last night, the crude alert, price approaching trigger for the first time. You see how far the BBC was? Now, that changed. See how we got just a little bit closer? Never did pull all the way back and touch it. That happened way back here. And we almost touched it here. We reached up for it. Okay? Sometimes the momentum in the market is such on a long or short move, price can't pull all the way back to physically touch the BBC. So there we are at the trigger. Now, we dropped on that first trigger. Price and the 5-minute BBC meet up somewhere in the vicinity of the trigger. That becomes your perfect storm. Waiting for it increases the high probability nature exponentially. It also means you'll miss a few trades. However, how many days do we see our alerts trigger time and time and time again? With each ensuing trigger, in many cases, you're presented with lower risk as the BBC gets closer and closer to the trigger itself. Now, this was on the 30-minute. Okay, so let's look at the 5. Okay, so on the 30, this trigger, the first trigger we could see on the 30-minute happened at the 4 a.m. Eastern candle. Okay, I got this on the right. Yeah, I changed all my times yesterday, did I not? 13:30. Yeah. Okay, that's correct. All right. So this trigger, 4 a.m. Eastern. So we'll go to the 5-minute. Find 4 a.m. Eastern. So the alert was already out. The trigger 25.95. This is exactly what I'm talking about. Okay, so price came down, touched the trigger, pulled back to the BBC, left that wick sticking out up above the BBC. So that's rejection. Okay, so then we close red and bold back below that little spot of blue and climbing. And this trigger here. Now, there's nothing wrong with this trigger, okay? But this one increases your probability exponentially because you just had a fresh pullback to the 5-minute BBC, sent you lower. So then watch what happens. You get a leg and a retracement to the BBC. You get a leg and a retracement. A little mini leg and a retracement. This one can't quite pull all the way back. And look where we are right now. Window of opportunity, 2105 to 2095. All right. That's the deal. Good word for the day. Sometimes we should ask why before we ask how. Jeremiah 23:16. Oh, wait a minute. I see a question here. Mike, so you wait for a 30-minute close above or below the BBC before you draw a window? Actually, drawing the window has nothing to do with the BBC, Mike. The window's based on price action. Jeremiah 23:16. Thus says the Lord of hosts, do not listen to the words of the prophets who prophesy to you. They make you worthless. They speak a vision of their own heart, not from the mouth of the Lord. Eugene Grace was president of Bethlehem Steel Corporation from 1916 to 1945. He said, thousands of engineers can design bridges, calculate the strain and the stress, draw up specifications for machines, but a great engineer is the man who can tell you whether the bridge or the machine should be built at all, where it should be built, and when it should be built. Asking why before how forces you to think about your core motivations and the source of your vision. There's much talk these days about purpose, and that's a good thing, because a life of purpose is more rewarding than a life of popularity or power. But your purpose must come from God. Thus says the Lord of hosts, do not listen to the words of the prophets who prophesy to you. They make you worthless. They speak a vision of their own heart, not from the mouth of the Lord. When God is the source of your vision, He will resource it. That's why the most important question you can ask is not, what's the best way to do this? But why am I doing it at all? I wake up with that question some days. How about you? Ultimately, God will make the final ruling on what you have given your life for. 1 Corinthians 3:13. Each one's work will become clear, for the day will declare it, because it will be revealed by fire, And the fire will test each one's work, of what sort it is. If anyone's work endures, he will receive a reward. If anyone's work is burned, he will suffer loss. Missionary and cricketer C.T. Studd wrote this: "Only one life, 'twill soon be past. Only what's done for Christ will last." And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.